For 8 hours, a Minnesota family was held at gunpoint in their own home until the father finally handed over $8 million in crypto. Two Texas brothers, Isaiah and Raymond Garcia, have now pleaded guilty to the armed kidnapping and robbery that terrorized that household. Prosecutors say the pair forced their way inside, restrained the family, and demanded access to their crypto wallets at gunpoint. Across the 8-hour ordeal, the father was coerced into transferring more than $8 million in digital assets straight to the attackers. It is the latest in a disturbing trend that criminals call wrench attacks, skipping the hacking entirely and simply coming for holders in person. And because crypto moves in seconds and is extremely hard to claw back, a transfer made under duress can be irreversible the instant it is signed. The guilty pleas close this case, but they land as a blunt warning. As on-chain wealth grows, the biggest security risk may no longer be your password, but your front door. The most relentless Bitcoin buyer on Earth just did something it almost never does. It stopped buying. Strategy, the company formerly known as MicroStrategy, has halted the share program it uses to raise cash for Bitcoin purchases. That program sold a preferred stock, ticker STRC, and funneled the proceeds straight into more Bitcoin, the engine behind its enormous stockpile. But the shares just hit a record low intraday price of about $82 before closing near $89 on heavy volume, and the company paused the sales. For years, Michael Saylor's flywheel looked unstoppable. Issue shares, buy Bitcoin, watch the stock climb, issue more shares, and repeat. A stall raises an uncomfortable question. What happens to the biggest corporate Bitcoin bet if the machine that funds it begins to sputter? Strategy still holds its massive Bitcoin position, but for the first time in a long while, the market is openly testing whether that famous flywheel can keep spinning at all. One of Wall Street's oldest asset managers just proposed a fund with a quietly radical idea: turn your dividends into Bitcoin. Franklin Templeton, which oversees more than $1 trillion, has filed for a new type of exchange-traded fund built around that exact twist. Instead of paying out the dividends from the stocks it holds, the fund would automatically use that cash to buy Bitcoin for investors. In effect, it is a way to keep your normal stock exposure while steadily converting the income it throws off into a growing Bitcoin position. It is a striking sign of how far the line between traditional finance and crypto has blurred. A TradFi giant bolting Bitcoin onto an ordinary dividend strategy. The fund still needs regulators to sign off, so it is not live yet, and the finer details could still change. But the direction is unmistakable. Some of the most established names in finance now treat Bitcoin not as a threat, but as a feature to sell. Subscribe now.